Bank reconciliation is the process of matching the transactions in your bank statement with the records in your own financial books to ensure everything lines up. It helps you confirm that your recorded transactions match what actually went in and out of your bank account. It might sound complicated, but it's a simple check that's very helpful for keeping your finances accurate and up to date. Let's break it down with an example. Imagine you have a small business, and at the end of the month, you receive a bank statement showing all the deposits and withdrawals in your bank account. In your own records, you've been tracking your sales, expenses, and any other money that goes in or out. The goal of reconciliation is to make sure both records are the same. If there are differences, you investigate why and adjust your records or contact the bank if something doesn't add up. Why is bank reconciliation important? First, it helps catch mistakes. Maybe you accidentally entered a $500 expense as $50, or the bank mistakenly withdrew an extra $20. Reconciling helps you spot these issues. It also helps prevent fraud. If there's a withdrawal you didn't make, reconciliation is a way to catch it early. And if you're running a business, accurate records are essential for tax reporting and financial health. To do a bank reconciliation, start by comparing the beginning balance on your bank statement with the balance in your records. They should match if the previous month was fully reconciled. Then, go through each transaction one by one, ticking off items that match. For example, if your statement shows a $100 deposit on the 5th, make sure you have a matching $100 deposit recorded on that date. Do this for every deposit, withdrawal, and transfer. Now, you may find some items that don't match. Common reasons for these differences include outstanding checks, bank fees, or interest earned. For instance, let's say you wrote a check for $200, but the person hasn't cashed it yet. This is called an outstanding check. It won't appear on your bank statement yet, but you'll have it recorded in your books. To reconcile, just make a note of this difference and remember that it will appear on your next bank statement. Another common issue is bank fees. Sometimes, banks charge small fees for maintenance or transactions, and these might not be in your records yet. When you spot these, just add them to your records to keep everything balanced. Let's go through a quick example to see how it works. Say your bank statement shows a balance of $1,000 at the end of the month, but your records show a balance of $1,050. There's a $50 difference. After checking each transaction, you discover two things: a $30 bank fee that wasn't recorded in your books, an outstanding check for $20 that hasn't cleared the bank yet. You adjust your records to include the $30 bank fee, which brings your book balance down to $1,020. Then, you remember the outstanding check for $20. Subtracting that brings your balance down to $1,000. Now everything matches. You've reconciled your bank statement. If after all this, there's still a difference you can't explain, it's worth double-checking both records or reaching out to the bank. Sometimes, it could be an error on their end. Here's a quick summary of the process. Compare the beginning balance on your bank statement to your records. Match each transaction one by one, looking for deposits, withdrawals, and transfers. Identify any differences. These could be outstanding checks, bank fees, or interest. Adjust your records for any fees or items that haven't cleared. Make sure your ending balances match. If they do, you've successfully reconciled your bank statement. Bank reconciliation may seem tedious, but it's a valuable step for managing your money accurately. By regularly checking and updating your records, you can keep everything organized, prevent errors, and gain a clear view of your financial health.